Dear students, this video is about how to prepare for exam 1. You have noticed that I have already sent out an announcement regarding this on D12. So the exam will have 50 multiple choice questions from chapters 1 through 4. And these will include both theory questions, conceptual questions, and problems, math problems. When I say theory or conceptual questions, I mean you have solved the quizzes. Let's go to one quiz. So look at this question. It is saying a corporate treasurer is typically responsible for each of the following duties except, right? So this is what I mean by a theory or conceptual question. And it doesn't require any calculation. And all 50 questions on the test will be multiple choice questions, both theory or conceptual questions like this and math problem. So an example of a math problem is let me go to chapter 3 quiz. So this is a math problem question. So it says, based on the information in table 3.1, assuming that no assets were disposed of during 2010, the amount of depreciation expense was, right? It is asking you to calculate depreciation expense. So each, you will have theory, conceptual questions from each chapter, and math problem questions from chapter 2, 3, 4. So chapter 1 does not have any math problems. Now, to prepare for theory conceptual questions, I will give you some guidelines now. In addition to what I already posted here, this review guide. So this is how to focus on your slides and the textbook to read to prepare for the exam. Now, to prepare for the math problems, please review the problems that we did in the class, that you did for the homework, and of course, the quiz. For theory conceptual questions, solve these quizzes as many times as you can. So every time you take, you will get a different version of these quizzes. Remember, these are not graded, but these will really help you to prepare for the test. So I strongly recommend you to take these self-test quizzes. Now, in terms of going over specific concepts from the textbook, so let's open chapter 1 slide. So this is a very important topic, the goal of the firm. So you remember the goal of the firm is to create value for the firm's owners, that is shareholders. So there may be a question, what is the goal of a firm? And there may be, there will be, or there may be multiple choices. And then you have to pick up the correct answer if this question is on the test. So that is, you need to know thoroughly about the goal of the firm. There may be questions about principles that form the foundations of finance. For example, incremental cash flow, accounting profits are not equal to cash flows. So there may be a question related to this. There may be a question related to money has a time value. Defining opportunity cost, you need to know what is an opportunity cost. You need to understand this principle, risk requires reward. Investors will not take an additional risk unless they expect to be compensated with additional reward or return. So the key thing here to remember is the word expect, right? Nobody knows what will happen in the future. So just because you took higher risk by investing in the equity market as opposed to the bond market, doesn't mean, because you took higher risk, doesn't mean you are guaranteed higher return. All you can do is expect a higher return. And the basis for the expectation is historical analysis and other mathematical models that we use in finance. So the key thing to remember here is expected return as opposed to actual return. Nobody knows standing today, nobody knows what will be the actual return in future. So very important concept, risk-return trade-off. Understand what is an efficient market, what does it imply? For example, in an efficient market, the market prices of all traded assets, such as stocks and bonds, fully reflect all available information. So understand efficient market thoroughly, understand agency problem thoroughly. What does it mean? How can it be reduced? For example, agency conflict is reduced through monitoring, compensation schemes, market mechanisms. So there may be a question like, which of the following reduces agency conflict, or which of the following does not reduce agency conflict, right? Ethics and trust in business, role of finance in business. So very important for you to know the definition of each of these different areas of finance. So capital budgeting decision. What is capital budgeting decision? It is about long-term investments a firm should undertake. Capital structure decision is about raising money to fund long-term investments. Working capital decision, on the other hand, it answers the question, how should cash flows arising from day-to-day operations be managed? Now, another very, very important area for you to focus on is different types of business organizations, different legal forms of business organizations and their advantages and disadvantages. For example, sole proprietorship, partnership, corporation, and within hybrid, you have S-type and LLC. So review these concepts. What is a sole proprietorship, partnership, corporation, and the benefits and drawbacks of a corporate form, very important, especially the idea of limited liability. The benefits and limitations of S-type corporation, benefits and limitations of limited liability companies. So there is a very nice table here summarizing different business organizational forms. So this is about chapter 1. These are some of the most important areas for you to focus on. Let's go over chapter 2. So chapter 2 is about financial markets and interest rates. So there may be a question like, which of the following roles is played by financial markets? So it's a financial markets play a critical role in capitalist economies. They help facilitate the transfer of funds from saving surplus units to saving deficit units, right? Different ways to transfer capital. What does direct transfer mean? Who is a venture capitalist? What is indirect transfer? What is indirect transfer using financial intermediary? What is a public offering? Very important concept. What is private or direct placement? What is a primary market? Remember, primary market is the initial issue, the first time a company, this is the only time the issuing firm ever gets any money, right? So this is the market in which new issues of securities are sold. And seasoned equity offering, it refers to sale of additional shares by a company. So new issue, first time or subsequent time, both happen in the primary market. But if it is the first time a company is raising money, it is called IPO, initial public offering. So it is not here on the slide. So, and anytime after a company sells new shares, that will be in the seasoned equity offering. Now, secondary market is where people like you and I trade, right? We can go to Robinhood or any other trading platform and buy or sell, buy from another investor or sell to another investor. So secondary market is where ownership changes hands. That is one way to remember it. This primary market is where actual money is actually raised by corporation. Now that can happen through IPO, and that is when the company sells shares for the first time in its history. And seasoned equity offering is any time after IPO, a company sells shares and raises money. So very important for you to know what constitutes money market, some examples. What is a capital market, some examples. Cash market, future market. What is an organized securities exchange? An example of an organized securities exchange, NYSE is an example. What is an over-the-counter market? What are the benefits of stock exchanges? For example, stock exchanges provide a continuous market, right? Remember, I showed you in the class when you go to Yahoo Finance and the stock market is open, the prices change continuously. So that is one dimension of continuous market. Establishes and publicizes fair security prices, helps businesses raise new capital. Now, selling securities to the public, who is an investment banker, underwriter, what is underwriter's spread, what is underwriting, distributing, advising, negotiated purchase, competitive bid purchase, commission or best efforts basis, privileged subscription. What is a Dutch auction? So this picture I went over in the class. What is a direct sale? Private debt placement. Now, what are advantages and disadvantages of private debt placements? For example, a big advantage is it is faster, right? However, the disadvantage is interest costs are higher. Similarly, what are flotation costs? What are some examples? What is Sarbanes-Oxley Act? Now, in terms of rates of return in the financial markets, very important for you to know is the definitions of these. Opportunity cost, you already saw that in chapter 1. Standard deviation, real return, maturity risk premium, liquidity risk premium. To get to nominal, you have to add the inflation. In other words, because it is real, it does not include inflation. So there are some theories that explains the shape of the term structure. So unbiased expectation theory, liquidity preference theory, market segmentation theory. I think I didn't go over one thing. So the term structure of interest rates, which is also called the yield curve, right? It's a very important topic for you. Remember, the graph could be upward sloping, like in this example, upward sloping. So lower interest rate for lower maturity bonds, and higher for higher maturity bonds. So this is maturity, these are interest rates. And this is upward sloping, and this is the normal yield curve. It can be flat or it can be inverted. So longer term securities command lower returns compared to short term securities. So it will be inverted, means you will have a higher interest rate here, but then as you move to longer period, it will go down. So that is about your chapter 2. Now chapter 3. Understanding financial statements and cash flows. So what is an income statement? Remember to read thoroughly so that you understand how it is different from balance sheet or any other financial statement. The basic idea of the income statement is sales minus expenses is equal to profits. The definitions of each of these items that go onto the income statement, and how do you calculate different line items on an income statement. What is common size income statement? What is gross profit margin, operating profit margin, net profit margin? In the balance sheet, what is a balance sheet? The main equation is assets is equal to liabilities plus equity. Balance sheet provides a snapshot of a firm's financial position. The transactions in balance sheet are recorded at cost price, so the book value of a firm may be very different from its current market value. Now, very, very important for you to, in a way, just memorize this. You may be able to answer a couple of questions if you understand this slide. For example, what goes on a balance sheet? Remember the basic thing, current assets and long-term assets. Long-term assets are also called fixed assets. And then if you add these two, you get total assets. And on the right-hand side, you have short-term debt, also called current liabilities, and long-term liabilities. You add these two, you get total liabilities. And you have stockholders or shareholders' equity. So you get total liabilities from these two, and then add stockholders' liabilities. So you get total liabilities plus stockholders' equity. And when we say current assets, what do we mean? These are some examples. Long-term assets, these are some examples. Short-term debt, these are some examples. Long-term liabilities, these are some examples. Stockholders' equity, these are some examples. So on the test, there could be a question like, which of the following is not a current asset? Which of the following is not a long-term asset? Something like that. So very, very important for you to understand this slide. So definition of current assets, and each of these different types of current assets. Similarly, long-term assets, debt, short-term debt, long-term debt, equity. What is retained earnings? What is the debt ratio? What does it indicate or measure? For example, debt ratio measures financial risk. What is net working capital? Current assets minus current liabilities. Now, how do we measure cash flows? What is accrual basis accounting? What is the statement of cash flows? What are the three different types of activities that are recorded under in an income statement of cash flows? For example, cash flows from operating activities, investing activities, and financing activities. And what is an example of cash flow from operations? Example of investment operation, an example of cash flow from financing activities, things like that. So this is how you can construct a cash flow from income statement. Very important for you to know the limitations of financial statements and accounting malpractice. What is GAAP? So this is all. That's all from chapter 3. Let me go to chapter 4. So in chapter 4, we focus on evaluating a firm's financial performance. So this chapter has a lot of ratios. And you need to know how to calculate each of these ratios and how to interpret them. The formula sheet will help you greatly to calculate these ratios, right? But you need to know how to interpret them. So from this chapter, first of all, why do we need financial analysis? It provides some justification here. Please review these. Review these. So for example, what is a liquid asset? What does liquidity measure? What are the two ratios that measure liquidity. So these are the two: current ratio, acid test, or quick ratio. This is how you calculate current ratio, acid test ratio. Now, there is another way to think about liquidity that measures the firm's ability to convert accounts receivable and inventory into cash. And these two ratios fall under there. So for example, on the test, there could be a question like, which of the following ratios measure a firm's ability to convert accounts receivable and inventory into cash, right? What does days in receivables, also called average collection period, measure? It measures how long it takes to collect the firm's receivables. Similarly, accounts receivable turnover, how many times are the accounts receivable rolled over each year? Similarly, days in inventory, how long is inventory held before being sold? Inventory turnover. Next is what are some of the ratios that focus on the profitability of the assets? And these are those ratios. How to calculate them, how to interpret them. And another type of ratios answer the question, how is the firm financing its assets? So you can calculate these two ratios, debt ratio and times interest earned. Question 4, are the firm's managers providing good return on the capital provided by the company's shareholders? For these, you can calculate return on equity. Question 5, are the firm's managers creating shareholder value? And you can use these two types of ratios, market value ratios and economic value added. This is price to earnings ratio. It measures how much investors are willing to pay for $1 of reported earnings. Price to book ratio compares the market value of a share of a stock to the book value per share of the reported equity. So you have a summary here. And very important for you to know also the limitations of financial ratio analysis. Please review these limitations. Now from this chapter, again, remember to focus on how to interpret these ratios, right? So if you need more explanation, the textbook does a very good job actually in explaining each of this ratio and whether a higher number is better or a lower number is better. For example, if you go to the textbook, here. So you'll see ratio and you will see what it tells you. So you'll see this information for almost all of the ratios in this chapter. So that's it about my suggestions on how to prepare for the theory and conceptual questions. And for the math questions, solve the quiz problems, the graded quiz, and also the self-test which are not graded, and the homework problems. As you prepare for the exam, make sure you use the formula sheet as your only resource, right? In addition to the financial calculator, of course. So this is a formula sheet. I'll print the formula sheet for you. I'll bring the Scantron for you. This formula sheet is based on the entire textbook. So your formulas are probably just up to this. So make sure you understand what each of these mean. Remember, I also have another file here that actually explain each of these acronyms, right? Or letter. So what does R mean? R star mean on this formula sheet, IRP mean, CR mean, so on and so forth, right? So remember, this is not allowed on the test. During the test, only the formula sheet is allowed. So that's it from me today. So I hope you the best luck with the exam. Take care. Bye.